Most people find bear markets as a bad sign for the market, but this is where millionaires and billionaires are made, as the best investors wait for this time to come to start investing. But obviously, not everyone can survive bear markets and make the best out of them, as 99% of the cryptocurrencies don't survive, as we are still in a bear market, which means we still have a chance to get in the boat. So if you want to know all about how famous investors invest in a bear market and which strategies they use, then do watch the video until the end, because we will also provide 5 free tips at the end on how to get rich. Now, without any further delay, let's start the video by explaining bear market. A bear market is typically described as a market loss of 20% or more. Bear markets are difficult to predict and manage. They start out looking like a typical market drop, then a correction, followed maybe by bargain hunting that is quickly found to have been premature. By the time the negative trend is unmistakable, prices have already fallen, leaving those who haven't reduced risk in their portfolios to wonder whether it's still worthwhile to do so, or whether it would merely compound the cost of their failed attempts to time the market. So let's delve into 9 bear market strategies that famous investors use, and you can use them to make the most of it. And the first thing to do is to cover your costs. Covering your living expenses should be your main priority. If you've been relying on short-term market gains to pay the bills, you won't be able to make long-term decisions when the value of your portfolio plummets. Advisors recommend that you fit your lifestyle to your income and create a savings account with 3 to 6 months of living expenses to keep you stable in case of an emergency. Only invest money that you can afford to lose. The second thing to do is diversify your portfolio. Some market segments are hurt worse than others during a bear market. According to experts, diversifying your portfolio can help you limit losses while capitalizing on profits in growing markets. In the crypto realm, this may imply diversifying your holdings across large-cap market leaders, fast-growing new cryptos, DeFi-related coins and tokens, cryptos involved with the NFT market, and stable coins. Diversification, according to investment gurus, can assist buffer your portfolio against losses because certain portions will lose less value than others. Another important thing that most people do but you shouldn't is panic selling. But before we delve into that, subscribe to our channel Crypto Ninja if you want to listen to more tips and financial recommendations for Bitcoin and other cryptocurrencies. When prices begin to decline precipitously, many investors have a natural desire to cash out. However, if you sell your cryptocurrency at a loss, the statistical, on-paper market decline becomes a real, physical loss of your own money. In such conditions, financial experts advise people to take a deep breath and stay in the market. Every bear market concludes with market recovery, and investors who can weather the storm are rewarded with long-term rewards. Individual cryptos may not survive a market slump, but if your portfolio is well diversified and you have steely nerves, staying in the market might position you to profit when opportunities come. Advice number 4 to survive a bear market is to avoid volatility. When prices fall, sensible investors look for assets that hold their value. That is why investing firms have cash accounts. They convert some of their holdings to cash, gold, or another stable asset. When prices fall, they can repurchase their stocks and keep the difference as profit. You do not have to leave the cryptocurrency realm to open a cash account. Stable coins provide the same purpose, allowing you to preserve your assets in your cryptocurrency account and respond promptly to market upturns. After avoiding volatility, another one of the best strategies to adopt is to make recurring buys. Dollar cost averaging is a tactic used by smart investors to weather downturn markets. They make little, frequent purchases on a weekly or monthly basis. This enables users to continue constructing a cryptocurrency portfolio without committing to a single huge buy that could rapidly turn into a large loss. The effect of cost averaging is to level out price fluctuation. Instead of taking the risk of buying at an extremely high or extremely cheap price, you gradually construct a portfolio based on a time-based average price. Identify growing market segments is also one of the most crucial things you should be doing in the bear market, as every new bull run starts with a new market segment. Even after a major market slump, some cryptocurrencies keep their worth. These are currencies and tokens associated with market segments that are seeing rapid growth. Cryptos utilized in the video gaming industry and online gambling, for example, have thrived well despite market downturns. Coins connected with DeFi, fan-based NFT marketplaces, cross-chain communications, and other applications are worth investigating, especially if you are familiar with the operations of a specific market segment. Utilizing technical analysis to make informed trading decisions is also very important in bear markets. The art of examining financial assets to estimate their future price movement is known as technical analysis. It entails analyzing statistical trends derived from historical price movement, volume data, and trading activity to find trading opportunities. Unlike fundamental analysis, which aims to forecast the value of an asset by taking into account multiple external factors surrounding the asset's price, technical analysis uses various indicators and analytical tools to evaluate an asset's strengths and weaknesses and forecast its future price trajectories, so use it as well. Another important strategy that most people take for granted but always work is keeping long-term versus short-term investment strategies. Sometimes a short trend occurs in a bear market, which drives some sectors of currencies to surge rapidly. Thus, investors make a lot of money here. The important thing to understand is that this trend is for the short term, hence, you should always take a profit considering you are still in a bear market. On the other hand, you should keep some cryptocurrencies separately considering them for long-term investment and keep keying in them as they will give you returns in the long run. And finally comes the most important thing, which if you were able to do in the bear market can confirm your success in bull run, and that is to be patient. According to researchers, the average bull market lasts roughly 6 years and provides a cumulative return of more than 200%. Bear markets last 18 months or less, with average losses of 39%. These data imply that if you are willing to store your assets for 5 or 10 years, you can afford to do nothing during a down market. Simply wait for it to pass. Prices will rise, your portfolio's worth will be restored, and you will resume earning profits. It's very important to note that these strategies may make some time to work, so do your own research before starting any type of staking. Now that the 9 most important and best strategy to survive a bear market and make immense profit in the bull run is clear, let's dive into 5 free tips on how to get rich. 1. The first tip to get rich quickly is to avoid and pay down debt. Debt is not necessarily bad in all instances, but it is something to be avoided most of the time. 2. Spend intentionally and minimize costs. Like if you want to become rich, it's important to minimize your costs and be more intentional with your spending. The third tip is invest as much as possible in a diversified portfolio. The fourth tip is to work on your career, as there is no substitute for higher income. As they say, there is only so much you can cut in terms of expenses, but there is no limit to how much your income can increase, at least in theory. And the final and fifth tip to get rich quickly is to find extra work. The idea of a side hustle is nothing new, but if you have some extra time and you can pick up some extra work for a few hours a week, that can be a powerful way to increase your income. That concludes the video about bear market strategies, where we have highlighted 9 strategies that most successful crypto investors have used, and which work in all market conditions, along with highlighting 5 free tips to get rich with cryptocurrencies. Now, if you have found the content helpful, don't forget to give this video a thumbs up and keep watching more crypto videos that will provide more tips and financial recommendations for making money with staking cryptocurrency, stocks, and finances. Thanks for watching and see you in the next video. Until then, goodbye.